On the call this morning, visionary CEO of Apple, Steve Jobs, is stepping down, potentially paving the way for Tim Cook to succeed him. Apple is down over 4% on the news. U.S. markets are mixed, with S&P futures slightly positive, while NASDAQ futures trade to the downside on the Steve Jobs announcement. Bank of America continues to rebound, up over 1% after Meredith Whitney says the bank has no urgent need to raise capital. I'm Jill Malandrino, and the morning call starts right now.
Good morning, I'm Scott Redler, Chief Strategic Officer with T3Live.com.
And I'm Jill, and together we bring you the morning call. So we saw some nice follow through yesterday from Tuesday. We finished 145 on light volume.
Yeah,
up 145 on light.
15 handles in the S&P.
Right, a little bit of light volume, and then we get into the aftermarket with the announcement from Apple that Steve Jobs is stepping down. He will remain chairman and director, so he'll still be involved with product and strategy, and Tim Cook will be stepping up to the plate.
Yeah, so a lot of news to digest. You know, on Tuesday we saw a follow-through day in the market. So what that tries to do is give investors a green light to maybe play or trade multiple positions. So last night was definitely very complicated for me. It was the first time I went out with 7, 8, 9 positions, including Apple. So 6:30, I get the phone call that that he resigned. I'm thinking in my head, S&P futures could be down 20 handles, Apple could be down 30. So coming in today with the futures flat and Apple only down about $10, $12, that's telling me that something has changed in the market. It's starting to breed some confidence that you could hold positions longer than just a day or for an oversold bounce, that potentially this new fledgling rally could continue to grow.
Right, and I also think with gold finishing below 1,800, that also lends some support to stocks as well.
Yes, we've been talking about we need a hard break in gold, a hard break in silver, and that would show us that the equity markets can continue. So if you look here at the chart of the spider or the SPX, let me show you the pattern here. Okay, this was Tuesday's date. This was the day that we were up. This was the follow through to the reversal that we saw back on August 9th. Then yesterday we talked in the morning call how you could buy the down open. The futures were down 8, 9 handles, and you had another day. So right there, that was constructive action. And then even midday, you had a dip midday and you were able to buy that. So something has changed a little bit where you can actually buy, have some confidence, and also buy a dip. I would say at this particular point, you can't just run out and buy everything. It's not a green light to go balls to the wall like Tepper would say. But at least you could hold things longer. And at this particular point, I'm going to try and stay with stocks that are working.